Hi everyone. Today's discussion extends our previous discussions around stimulus measures that have been introduced by the government and which of those are the most beneficial for SMEs. Obviously, with the introduction of the JobKeeper payment, SMEs will benefit from getting payments of up to $1,500 a fortnight to retain employees if they can, so long as the organization can demonstrate up to a 30% fall in revenue compared to a comparable period in the previous 12 months, or an anticipated fall in revenue in coming months compared to comparable period in the previous 12 months. This is for organizations with a turnover of up to $1 billion. With the JobKeeper payment coming in, the question is once again, how do you survive given in effect the first money that you will receive under this scheme, if you're eligible for it, will be the 1st of May, and between the end of March and up to May, you have to still pay your team members and be able to claim those payments back from May onwards. So obviously this still leaves the issue of a 2-month period when you have to fund the payments for the team members to be able to avail the payments under the JobKeeper scheme, depending on how bad the situation is in your business with regards to cash flows. That may or may not be a challenge. So here, following on from previous discussions, the $250,000 loan guarantee, the bank loan guaranteed by the government, can come in useful to enable you to have the cash to retain the employees till you get the payments from the JobKeeper scheme in May. Now, with the $250,000 government guaranteed loan, it is critically important to be aware that it's not an automatic approval by any of the banks who will be issuing these loans. The banks have all said that they will still assess applications from companies based on the companies being viable prior to the current COVID-19 impact. So the financial viability of the company would still be assessed as a part of the loan application. And also you must be able to demonstrate to some extent that what you are suffering as a part of COVID-19 is a temporary blip, and on the other side of it, your revenues will recover. So in effect, while it's still quite early in the piece as to how the banks will assess these loans, it is important to have cash flows prepared that can demonstrate to your bank that you will recover your revenues over a period of 1 year, 2 years, once the impact of COVID-19 passes. You will also need to demonstrate that your business was viable before COVID-19 hit, and that will have a bearing on whether you get the loan or not. I think with the word government guarantee being attached to this loan facility, there might be a level of feeling that the banks will not assess the loans commercially to the fullest extent, but that's not the case. It is important that you are prepared as an SME to be able to demonstrate to your bank when you go for this loan that you have the financial potential within the business post the COVID-19 slump to recover, and your business was financially viable before this slump started. So it is important to keep tab of that and be prepared for that in terms of any application that you lodge with your bank to get the finance, and that finance can be a key way of bridging the gap between paying your team members now and getting the JobKeeper payments starting from May, if you're eligible for those payments. So if you are focusing your energy as an SME to survive this slump, then having your documents in order for the SME loan of up to $250,000 so that you can get that funding is important through the coming weeks to be able to get to a stage where you can then start taking benefits of the JobKeeper payment, the April stimulus from the BAS round, pay as you go, and all those sort of measures. So this should be part of your survival plan over the next few weeks as you navigate these difficult times in business. Thank you.